The world's most powerful financial institution just made a move that should terrify every American. While you were focused on holiday shopping and New Year's resolutions, BlackRock quietly repositioned $2.1 trillion away from the United States. This isn't just portfolio rebalancing. This is the smart money fleeing before the collapse. I'm about to show you something the mainstream media will never tell you, a mathematical pattern that has destroyed 3 global superpowers in the last 500 years. The same pattern is playing out right now in America, stage by stage, exactly as it did in Spain, the Netherlands, and Britain. And we're not at the beginning. We're deep into stage 3. By the end of this video, you'll understand why America's $38 trillion debt isn't just a big number, it's a death trap. You'll see why foreign central banks are dumping U.S. Treasury bonds faster than ever recorded. And you'll learn why the world's largest asset manager just bet against the full faith and credit of the United States government. This isn't fear-mongering. This is pattern recognition. The mathematics don't lie, and the clock is ticking. Let me start with a number that should make your blood run cold. $38.5 trillion. That's America's national debt as of today, January 9th, 2026. Not a projection, not an estimate. The actual number sitting on the Treasury's books right now. But here's what makes this truly terrifying. Every major economic collapse in history followed the exact same 4-stage cycle. I call it the empire death spiral. And once you see this pattern, you'll realize we're not heading toward a crisis. We're already in one. Stage 1 is ascension. A nation becomes the center of global finance. Their currency dominates international trade. Capital floods in from everywhere. Banks expand. Markets boom. Innovation accelerates. Everyone wants in. This phase typically lasts 50 to 80 years. Stage 2 is overextension. Success breeds arrogance. The government starts spending beyond its means on military expansion, foreign interventions, and domestic programs, all funded with borrowed money. Debt grows faster than the economy, but nobody worries, because asset prices keep rising. This stage lasts 20 to 40 years. Stage 3 is the silent exodus. The smart money sees what's coming and starts quietly rotating capital out. No announcements, no press releases, just systematic, calculated movement into safer jurisdictions. This is the critical phase, and it lasts only 18 to 36 months. Stage 4 is the collapse. The currency loses reserve status, foreign central banks dump their holdings, inflation explodes, interest rates spike, asset prices crash simultaneously. The middle class gets wiped out, and everyone asks how they didn't see it coming. Now let me prove this pattern is real with 3 historical examples that will make your skin crawl. 1500s, Spain, the most powerful empire on earth. Spanish galleons returning from the Americas loaded with more gold and silver than had ever been seen in human history. The Spanish real was the global reserve currency. Madrid was the financial center of the known world. Stage 1 complete. King Philip II controlled half of Europe. Spanish armies were considered unstoppable. But what did they do with all that wealth? They spent it on everything. Wars with France, England, the Ottoman Empire, and the Dutch. A massive military spanning 3 continents. Royal palaces that cost kingdoms. By 1550, Spanish government spending was running at 300% of revenue, 3 times what they collected in taxes. The difference was borrowed from Italian banks, German merchants, anyone who would lend. But gold kept flowing, so nobody worried. Stage 2 verified. Then something changed quietly. 1555. Major Spanish banking families started moving assets to Genoa. The Fugger family, Spain's biggest creditors, began demanding repayment in gold instead of promises. Wealthy merchants transferred operations to Amsterdam, not all at once, but gradually. Why? Because they could read financial statements, and the statements said Spain was functionally bankrupt. The Spanish government was paying 40% interest on some loans. 40%. That's not strength, that's desperation. Stage 3 documented. 1557, Spain defaulted on its debts for the first time. Credit markets froze. Spanish bonds became worthless overnight. But the king promised it was temporary. 1560, Spain defaulted again. 1575 again. 1596 again. 4 defaults in 40 years. The currency collapsed. Inflation destroyed the middle class. Spanish power evaporated. By 1600, Spain was a shadow of its former self. The Golden Age was over forever. Stage 4 complete. Where did the money go? North to the Dutch Republic. Amsterdam became the new center of global finance. 1600s, Amsterdam, the richest city in the world by every measure. The Dutch East India Company was worth $8.28 trillion in today's money, more than Apple, Microsoft, Amazon, and Google combined times 2. The Dutch guilder was the world's reserve currency. Stage 1, undeniable. Then came the wars, always the wars. 3 Anglo-Dutch wars, wars with France and Spain, Government debt increased from 4 million guilders in 1650 to 80 million by 1690, a 20-fold increase in 40 years. Meanwhile, tulip mania hit. Tulip bulbs selling for more than houses. Everyone was getting rich on paper. The Bank of Amsterdam, supposedly the safest institution in Europe, was secretly lending out depositor money to fund government wars. Classic Ponzi mechanics. Stage 2? Check. 1690, the smart money started moving. Major banking families transferred operations to London. Portuguese traders opened offices in England. German financiers pulled capital out systematically. Why? Because they knew the Bank of Amsterdam was broke. Had been since 1672. Stage 3 verified. 1795, French revolutionary armies invaded. The Dutch Republic fell. The guilder collapsed. The Bank of Amsterdam's fraud was exposed. Depositors lost everything. The Dutch Golden Age ended. Just like that. 150 years of dominance gone in months. Stage 4 complete. Where did the capital go? London. Britain was next. 1700s to 1900s, the British Empire. The sun never sets on the British flag. At its peak, Britain controlled 23% of the world's population and a quarter of Earth's landmass. The pound sterling was the global reserve currency for over 200 years. Stage 1, absolute. Then came the 20th century and 2 world wars. World War I cost Britain $44 billion, over $600 billion in today's money. They borrowed from America, from their own citizens, from anyone who would lend. Government debt went from 30% of GDP to 130%. The same level America is at today. Britain ended the war technically victorious, but financially destroyed. Stage 2 complete. 1949, the quiet exodus began. Major British corporations started moving operations to America. Unilever, Shell, British Petroleum. Wealthy families transferred assets overseas. The brain drain accelerated. By 1960, foreign investment in Britain had fallen 62% from pre-war levels. Stage 3 documented. 1967, the pound devalued 14.3% overnight. 1976, Britain went to the International Monetary Fund for a bailout. The former global superpower had to beg for emergency loans like a developing nation. The pound lost reserve currency status. Stage 4 verified. 3 empires, 3 reserve currencies, same 4-stage pattern, same outcome. Spain, the Netherlands, Britain, all followed the exact same path from dominance to collapse. Before moving forward, if this video made you stop and think, then the conversation doesn't end here. Leave a comment below and tell me what topic you want us to go deeper into next. This channel exists to break down what most people are never told, and your questions shape what comes next. If you want to understand these shifts before they become obvious to everyone else, make sure you subscribe, like this video, and turn on notifications, because what's coming won't be explained on the evening news, but it will be explained here. Now, let me show you why America is in stage 3 right now. 1944, Bretton Woods. America becomes the global reserve currency. The dollar is backed by gold at $35 per ounce. Capital floods into America. The Golden Age begins. Stage 1 complete. 1971, August 15th, Richard Nixon ends gold convertibility. The dollar becomes pure fiat currency backed only by faith in the US government. And what happens when you remove all limits? Spending explodes. 1980, US national debt is $900 billion. 2020, $27 trillion. January 2025, $36.1 trillion. December 2025, $38.4 trillion. That's a 4,200% increase in 45 years. But that's only government debt. Corporate debt hit $13.5 trillion. Household debt, $18 trillion. Total US debt, over $100 trillion. That's 370% of GDP. For context, Spain defaulted at 200%. The Dutch Republic collapsed at 250%. Britain lost reserve status at 130%. America is at 370%. The government now pays over $1 trillion per year just on interest payments. More than defense spending, more than Medicare. $1 trillion just to service past debt. And how do we fund that? We print money. The Federal Reserve's balance sheet went from $800 billion in 2008 to $9 trillion in 2022. Stage 2, complete, verified, mathematical. Now here's where it gets terrifying. Stage 3, the exodus. China held over $1 trillion in US treasuries in 2013. Today, $760 billion. They've sold over $300 billion in the last decade. Japan reduced their position by $220 billion since 2022. Saudi Arabia is selling. Belgium reduced holdings. Switzerland selling. France reducing exposure. Even the Federal Reserve itself is reducing its balance sheet through quantitative tightening. So who's buying US debt now? Mostly the US government itself. Printing money to buy your own debt. That's not strength, that's desperation. And it's not just governments. BlackRock, the world's largest asset manager with over $10 trillion in assets, has restructured portfolios, reduced U.S. Treasury exposure, increased positions in emerging markets, European infrastructure, Asian real estate, gold, and commodities. JP Morgan restructured institutional allocations. Goldman Sachs reduced U.S. equity recommendations. The smart money is moving just like they did in Spain, Amsterdam, and London. Stage 3 verified. Based on the pattern, here's what happens in Stage 4. The dollar gradually loses reserve currency status. Not overnight, but gradually, then suddenly. Countries start settling trade in other currencies. China and Brazil trading in yuan, India and Russia settling in rupees, BRICS nations developing alternative payment systems, over 40% of global GDP now in BRICS-aligned countries building infrastructure to trade without dollars. The petrodollar system is fracturing. Saudi Arabia has indicated willingness to accept other currencies for oil. When dollar demand drops significantly, what happens to all those dollars sitting in foreign central banks? They come home, flooding the U.S. economy. That's when inflation goes vertical. The Fed will face an impossible choice: raise interest rates dramatically to crush inflation, which makes the $38 trillion debt completely unpayable and crashes the economy. Or keep printing, which destroys the currency through hyperinflation. Either path leads to the same place. Asset prices crash because liquidity disappears, banks fail, pension funds go insolvent. The middle class holding most of their wealth in dollars gets completely wiped out. This isn't speculation. This is the pattern, and it's happened every single time. Now, I know what you're thinking, but America is different. We have the strongest military, the most advanced technology, the best universities. Spain had the most powerful military in the 1500s. Didn't stop economic collapse. The Dutch had the most advanced financial technology of the 1600s. They invented modern capitalism. Didn't stop collapse. Britain had the largest empire in history. Didn't stop collapse. Military power doesn't prevent economic mathematics. Technology doesn't stop currency debasement. Innovation doesn't overcome fiscal insanity. Exceptionalism is just a story empires tell themselves before they fall. But the Fed can print infinite money. They printed infinite money in Weimar Germany. Hyperinflation destroyed the middle class. They printed in Zimbabwe. $100 trillion notes, completely worthless. They printed in Venezuela. Inflation hit 1,000,000%. People eating zoo animals to survive. Printing money doesn't create wealth. It transfers it from savers to debtors, from workers to asset holders, from the middle class to the financial elite, until confidence breaks. Every empire thinks it's different. They're always wrong. The pattern doesn't care about narratives. It doesn't need your permission. It just unfolds like clockwork, like mathematics, like gravity. And right now, all the indicators are screaming Stage 3. So what does this mean for you practically? First, if most of your wealth is in dollar-denominated assets, you're exposed. Diversification isn't a nice-to-have anymore. It's survival. Consider assets that hold value during currency debasement. Gold has held value for 5,000 years across every civilization. Silver, commodities, real assets that can't be printed into existence. Second, geographic diversification. If major institutions are moving capital internationally, consider following. Research stable foreign currencies, Swiss francs, Singapore dollars, Norwegian kroner. Spread political risk across jurisdictions. Third, understand the timeline. Stage 3 doesn't last forever. Historically, 18 to 36 months from start to finish. We're probably 12 to 15 months in, based on when foreign selling accelerated. That means you have time, not years, months. Fourth, increase liquidity. Keep accessible cash. Yes, it loses value to inflation, but in a crisis, liquidity gives you options. Illiquid assets trap you exactly when you need mobility most. Fifth, reduce debt. High debt in a rising rate environment is financial suicide. Every point interest rates rise makes your debt more expensive to service, and rates are structurally going higher from here. Sixth, invest in skills and relationships. The one asset that survives every collapse is human capital. Skills that create value, knowledge that solves problems, relationships built on trust. These can't be inflated away or confiscated by governments. Seventh, stay informed. The people who survive these transitions are the ones who see them coming, who understand the pattern, who don't wait for mainstream media to confirm what's already obvious from the data. This isn't fear-mongering. This is pattern recognition. This is 500 years of economic history showing you the same cycle over and over. America's debt hit $38 trillion for a reason. Foreign central banks are selling for a reason. Major institutions are diversifying for a reason. They see the same pattern you just learned. We're in Stage 3, the capital flight phase, the silent exodus. The smart money is leaving. The warning signs are everywhere if you know what to look for. Stage 4 is coming. The mathematics are inevitable. The only question is whether you'll be positioned correctly when it hits, or whether you'll be asking like millions throughout history how you didn't see it coming when all the signs were right there in front of you. The information is here. The pattern is clear. The data is verifiable. The choice is yours. The pattern doesn't care if you believe in it. It doesn't need your faith. It doesn't require your acceptance. It just unfolds like every time before. The people who survive these transitions aren't always the ones with the most money. They're the ones with the best information and the courage to act on it. This is just one piece of the bigger picture. Subscribe if you want to understand the full context and how to better protect yourself in uncertain times. And the video on screen takes this story one step further.